Well, it hasn't been a great week for Bitcoin investors as the crypto crosses attack that death cross phase. It follows China's movement to shut down a number of mining operations. And to tell us more is Ian Lowe from Dacxi. Ian, great to have you on the program this afternoon. So we've been talking about it all week, that death cross when it comes to Bitcoin. Tell us what it is and why it's so important.
So the death cross refers to, it's a term that's used in trading communities to describe an inflection point whereby the 50-day rolling average price typically of a stock or another instrument, where that 50-day rolling price becomes lower than the 200-day rolling price or the average price. So it's seen as a significant inflection point in the global trading community, and the reason for that is that they would generally use it as a method by which to point to, simplistically, a bear or a bull market that may follow that inflection point. But equally, it's referred to as the golden cross, whereby the 50-day rolling average price exceeds the 200-day rolling average price. So it can obviously go both ways. And in the last week, we had what's called the death cross in the industry, which is where that 50-day rolling price dropped lower than the 200-day rolling average price. And it's worth just remembering that with Bitcoin specifically, this has happened twice before. So it's not the first time. It happened in 2018 and again in 2020. And on both the occasions where that happened, the price actually over the subsequent weeks and months recovered really very strongly. So it's not the first time we've seen this. In terms of what it means, I think very generally it means that, Bitcoin and crypto more generally is still a bumpy ride. Corrections and market dips such as what we've seen over the last few weeks, specifically with Bitcoin, does shake out some of the speculation. But at the same time, I think this death cross or this inflection point for Bitcoin is a little bit different to what we've seen previously with Bitcoin, and there's a couple of reasons for that. First of all, since the last inflection point like this in 2020, there are much greater levels of utility for Bitcoin than existed back then. We've seen Visa, MasterCard, PayPal, and I've talked about those previously, all facilitating end-to-end payments with Bitcoin. And so the utility around Bitcoin has increased significantly and continues to increase. The second is that we see much higher levels of participation. So in other words, that the number of investors or individuals or institutions that hold Bitcoin has significantly increased. So greater utility, higher levels of participation, I think, are two important indicators that this inflection point is a little bit different to the ones that preceded it. And indeed, if you look at the price of Bitcoin, the last day or two, we've seen it's recovered from a low of 32,000 US up to just around about 35,000 US dollars. So, we are seeing some buyers come back into the market. I think it's worth keeping in mind, and again, we always take an investor's view. The traders see this inflection point as potentially quite significant. Investors see it as being less significant. And so to that extent, the softening of the price from an investor's perspective does present a buying opportunity.
But Ian, what about those external factors that are currently affecting price action, like China cracking down on those mining operations? Surely that's going to have a long-term effect.
Well, it certainly has had an effect. How long that continues to influence the price remains to be seen. So just to clarify a couple of points on this, blockchain miners and crypto exchanges, this is not a new development in China. I mean, they've been banned since 2018. The new development, of course, is that that is now being enforced in a way that is very conspicuous and has obvious implications. I think it's worth remembering that 50% or more of the blockchain miners globally are based in China. And so we saw a slowdown in the blockchain of around about sort of 20% in the period that has followed some of these crackdowns. And so that's potentially not unexpected. But I think also if you look at the commentary in the industry, what we're seeing is that most of the industry is confident that mining capacity will re-emerge outside of China. It remains to be seen over what period of time that will happen, but that confidence is evident. And so more generally, utility and interest in Bitcoin continues to build. So some of the positive counteractions to what we've seen in China. Recently, a survey was released that showed 100 global hedge funds indicating that they want to build their digital assets position up to more than 7% of their total capacity over the next few years. And so that's a very large number, in the hundreds of billions of dollars to be held in digital assets, and a significant development. Bitcoin have also announced an upgrade, an update that's coming to their blockchain called Taproot. That's going to be released at this stage in November, and that will equate to a faster, more efficient version of the Bitcoin blockchain. And it will also bring in smart contract capabilities, such as what we see on other blockchains like Ethereum, etc. So the market continues to move forward, I guess is what we're saying. China has definitely had an impact. I think the price is likely to remain soft in the short term, but we're also seeing continued lift in utility and participation as it relates to Bitcoin specifically.
So Bitcoin specifically, but you mentioned Ethereum there. What is the risks when it comes to the competition of other coins that are being released and their development processes?
Well, look, we're in digital money 1.0 here. So this is why, very broadly, you see the crypto market moving in either direction, somewhat in step across all of the major coins. It's very different when you get to the long tail, which is driven almost exclusively by speculation, and it's all driven by trading activity, where people are taking small percentage margins for the most part over very short periods of trading. So, but when we look at the major coins, the blue chip coins, they move very much in step with each other. So we think that is likely to continue over the short to medium term.
Ian, great to check in with you. Thanks so much for joining us this afternoon from Dacxi.
Thanks for having me.